Do you think you're ready to raise capital? Let's see if your financial model is also ready. Because most investors are actually finance wizards, so you need to get ready to impress them. So you start with your top line. This is an example from A16C, but basically what they're saying is that based on your historicals or projections, you start with the amount of customers you have and then the average value of those customers per month. Then you get to your total gross revenue. And then either based on your projections or your historicals, you add your growth rate month to month. And then we dive into expenses. What are the fees directly related to your revenue? And you deduct those and you get to net revenue. For your costs, it is good to show the month to month change. If you don't have that historically, just show it in your projections because usually with economies of scale, those type of fees should go down. And then you dive further into your expenses where eventually you get to your cost of goods sold with your gross profit and your gross margin. For software companies, we like to see a gross margin well above 70%. And then you dive even further deep into your expenses and eventually your net profit. So the final things you are actually showing in your financial model is your big vision, meaning how do you get to $100 million in ARR, your costs on how to get to $100 million in ARR, and your cash runway, which basically tells investors how often you will have to raise capital to get to that $100 million. Remember that in 2024, the biggest trend was that investors like to see sustainable growth. So keep that in mind when you're building your model out. Feel free to ask questions. I know this is a hard topic, and follow us for more tips and tricks regarding your capital raise.